This is Let's Talk Business with your hosts, Marc Ebinger and Heather Boehme. Now, here's Marc.
Welcome to Let's Talk Business, a show that talks entrepreneurship with some of the best businesses in the San Antonio area. Coming up on the show today, we're going to talk with my favorite lawyer, Keaton Frieberg, law partner of Texas Suits, who specializes in real estate and business transactions and litigation. Keaton, welcome back to the show.
Hey, always happy to be here. Thank you.
I'm loving the new digs, man.
Thanks. Thank you.
I feel underdressed, but I still look good, but you look better.
You do. No, you look great.
That's
He's
a great
got to
color.
represent Texas Suits.
We're also going to talk with Jaime Sepulveda, the founder and CEO of Strategic Property Management, a company that helps investors grow and manage their residential and multifamily real estate portfolios. Jaime, welcome back to the show.
Thank you for having me back. Looking forward to it.
Yeah, you're looking sharp as well.
Trying to keep up Keaton. You know how that goes.
I'm
said
got
the
a good,
color
good
coordination.
podcast voice.
In studio with us today is Heather Boehme, a certified business coach that works with business owners to gain clarity in business and achieve their goals. Heather, welcome back.
Always happy to be here. I mean, I don't get to wear suits because I could, I guess.
You could wear, you know what? I'm actually offended you didn't wear a suit.
It's a different vibe when I wear a suit. I look like a teeny tiny little powerhouse. I'm just like,
Well, that's good. I like it. I'm your host, Marc Ebinger, the owner of Crükus Marketing Agency, a company that specializes in giving small businesses a competitive edge by hiring administrative and social media experts from the Philippines. You know, it says in my notes it's a little $7 an hour, but we actually have to raise our prices now. It's inflation.
Imagine that.
It's COVID.
Imagine
What is
that.
the
I
world
haven't heard that
coming
before.
to?
A quick
I'll
reminder.
do the same.
yeah.
No, you need to stop. Because like 5% raise on your side is a lot more than mine, I think. All right, a quick reminder for our listeners, you can catch video and podcast versions of the show anytime by visiting our website at satalkradio.com. And if you're a business owner in the San Antonio area and would like to have your company featured on the show, visit our website at satalkradio.com or call our office at 210-960-8210. That's 210-960-8210. All right, so Keaton, it's great as always to have you back on the show. I know you got a disclaimer you want to get out in front of folks because we're on a podcast and we don't want people thinking that, oh, this is like real advice that I need to take action on immediately without talking to anybody. So what's your disclaimer?
Absolutely. Thank you. Yeah, anything said today on the podcast is not, or YouTube or wherever you're hearing it, is not legal advice. You know, if you have a legal issue, you should seek independent counsel to help you with your particular matter.
All right, so this is the little bit of fun that I want to have with Keaton before we get too far off, right? So first of all, for those of you who don't know Keaton, he's a lot of fun. He's got a great spirit. He's got a great personality. It's like if you're going to pick a lawyer to work for you in the business realm, why not have somebody who's smiling, having a good time, and thinks he dresses fancy?
You're too nice.
Thinks he dresses fancy.
Thank you.
But I
That
slid one into
particular way, yeah.
Anyway, so I watched this. My wife and I are hooked on this show on Netflix called Suits.
Yes, I just started watching that
You
again.
did?
Yes.
Why did you start watching? Did you hear me
I've
talking?
seen it before. I started watching it back when it came out, but now Meghan Markle, and I love a law drama.
Yeah. So, of course, the show's name is Suits, and you guys are Texas Suits, which I think if they had your logo with the boat with the tie there, because they talk about ties and stuff on the show. But have you seen the show anyway? Suits?
It's so funny that you said that because literally this last week, everybody's been telling me to watch it. And I was like, finally, one day I was just exhausted. And I was like, I'm going to throw it on. So I put it on, and now I'm like 6 episodes deep, which is a lot for me because I don't really sit down and watch Netflix ever, but it's going great.
Well, you're like $250 an hour or something like that, right? I mean, it's like your time is super valuable. How do you even watch TV? My wife would be like, shouldn't you be doing something right? Shouldn't you be billing
Go
somebody
collect.
for this or whatever? So that'd be a little bit.
So, okay, just for the sake of having fun,
Sure.
how does that compare to real life?
That's a great question.
It's exactly like real life. You don't say anything else.
Don't say anything else. That's where you stop.
So the one thing that I think is crazy is when they have, they'll get a new case and then they'll go to trial on it like that same day.
Oh my
That's
gosh.
the one thing that I'm just like, wow, because usually it's months, years sometimes
doesn't
to go
make
to
for
trial.
good TV,
Yeah,
though.
right. But
Just
they'll
waiting.
Exactly.
Well, it's just like Law and Order. So, I was a cop for 30 years, right? So, I worked homicide cases. And I worked internal affairs cases, and it's just like that. It's like, come on, they turn it around in an hour. I actually had to stop watching these crime shows when I went to homicide because I was like, oh my gosh, I couldn't even watch them anymore. But do you get that feel at all when you're watching Suits?
I mean, there's a lot that's actually pretty on point as far as procedural matters that they handle, or like the type of cases and issues that they handle. The only thing that's really blown that I thought was crazy was the whole turnaround time on how fast the cases work. But other than that, like it's kind of realistic.
You know, it's talking about timeline. You're talking about the PD world, law world, real estate world, same thing. Everybody knows about these reality real estate shows, the renovation shows.
Yeah.
And I would always find, especially when I first got licensed, I had already been flipping properties. And then I saw one of those shows. They started coming up. I was like, how do they do it so fast? How do these guys get these timelines until you start figuring it out?
They don't.
They're not. They're not doing it. Just good for TV.
Or they do. And have you seen there's several home inspectors on TikToks that'll just come and they'll show the flips, the super fast flips, and just lipstick on a pig.
Oh, cutting corners.
Oh, yeah.
I had a friend who said she got a renovation and she was like, I was surprised that the contractors would just YouTube and Google how to do things that I knew how to do. I was like,
Sure.
but yeah, it's wild out there. But a good one, it'll take 6 to 9 months.
That's why we live in this microwave society. We feel like everything's supposed to be like this, but the reality is something different.
And I think
So
that's
true.
a good segue into talking about what you do, because when people rent their properties or they buy a building, they think they can manage it themselves. And then what happens?
Exactly. We kind of expect that it's kind of turnkey. We all expect and want it to be turnkey. And that's kind of, I guess, where we kind of come in with our services, is that we try to provide everything from A to Z. We try to provide a full turnkey product because we know everybody's busy. Everybody's got their core competency that they're taking care of, their career, their family, their kids. But they also understand the importance of building future wealth, whether it be for themselves or next generation. And real estate has proven to be that avenue. So that's what we're there for. We're there for those individuals that know that they understand the value. They don't have the time to be able to do it correctly, and that's where we kind of come in. We partner up with them. We walk with them along the whole process of not only just acquiring, let's identify value adds, let's make sure it's performing correctly, and let's make sure that it's appreciating over time. So if we're winning it, if it's time to liquidate it or turn it, whatever that may be, it's ready.
So I feel like when people think real estate, they think buy, sell. But you are that long-term hold management piece. So how did you get into property management?
It wasn't directly. What happened was early 2000s. I was investing and flipping properties as a hobby. It was a side hustle of mine, and I had a business that I was running at that time. In about 2005, 2006, my business, I saw the writing on the wall was being phased out, and I was stuck with the question, hey, what am I going to do now? I kind of like this real estate thing. Let me get licensed. I can 10X what I have already been doing. So I got licensed, and of course, as we all know, life doesn't usually work out the way we specifically plan it. And instead of 10Xing what I was doing on the investment side, I had an opportunity to buy into a real estate franchise. And so now I turned into recruiting and training real estate agents. I did that for about 3 years until I realized like that was not my cup of tea. During those 3 years, I would have people constantly just kind of ask me. I always more spoke the investor lingo. So they would ask me, hey, can you help me acquire real estate investment? Sure, we can do that. Hey, will you help me manage it? Says, well, I've got all the tools under this umbrella. It'll be a couple extra bucks a month. Sure, let's do that. And at that 3-year period, when I realized that recruiting and training real estate agents wasn't my gig, I turned around. We had about 50 properties that were just unorganically being managed. I had a business partner at that time. I sold him my portion of the real estate firm. I took these 50 properties, instilled some systems, some processes, hired the right people to get in there. Absolutely. That's always the key. And we started growing it from there. And our core values that we have right now are things that I wish I would have had and known when I first started, especially in the early 2000s when I was flipping on my own. I was your stereotypical first-time investor where I was being taken advantage by contractors. They weren't doing the right work. They weren't showing up. I wasn't filling out the proper contracts for renting properties. So I was finding a lot of pitfalls, and it cost me a lot of time and a lot of money. So those bases is now you fast forward 20 years, and a lot of that is what we provide to our clients. We tell our clients, hey, you guys don't have to literally worry about anything in the sense of when it comes to finding qualified vendors, doing quality work, finding qualified residents, making sure your asset is not only being taken care of, but it's appreciating correctly, market value-wise. So that's kind of what's grown over the past 20 years, if you want to call it. SPM, Strategic Property Management, has been around since 2011. And that's when we've got intentional about it.
I love that. Got intentional about it.
Yes. And its systems, processes, the right people, that's getting intentional.
And what size of property is your sweet spot to manage?
You know, that's a great question. So we found out throughout the years that our sweet spot is individuals that are just starting out, or they have somewhere between 5 to 6 properties. Why that happens is because that's where we can provide the biggest value.
Okay.
We've learned that those individuals, those portfolios, are the ones that need what we have to offer, in the sense of we're very personal with our clientele. We try to stay in touch as much as possible. Our business model, we cap what our full portfolio is, because we've learned that if we scale past that, now we're changing our systems, now we're changing our processes, we're changing our people. And it's taken us many years to get where we're at, our systems and processes. I don't want to change that, because where we're at right now, it still allows us to have communication with our clients, and it's not just necessarily a number. So that's kind of why we stay where we're at. And those individuals that are hovering or averaging between 3 to 7 properties, I think that's who we provide the best service to.
And when you talk about protecting those assets, protecting that investment property, this is where you come in. There was a good question that...
So especially if it's, bigger than a single family, like if people have like a small apartment complex or something like that, generally we're not seeing one person say, I, Heather Boehme, am buying this entire apartment complex. What's the structure of that?
I think this is a great question for Keaton.
Yeah. So, whether it's, and I don't know what, your portfolio looks like or your clientele looks like, as far as whether they're owning these properties in their personal names, or whether they're creating an LLC or even a series LLC to hold these properties. But from my perspective, the most advantageous way to hold all of these assets, especially here in Texas, is the series limited liability company. The beauty of the series limited liability company is that, if you take a regular limited liability company, it has the ability, if you think of it as like an umbrella, you have the ability to split off of that limited liability company and make what's called series or cells. And each of these cells is severed from liability from one another, just like a regular LLC. So it works perfect for real estate investors who are like what you're talking about here, who have 4, 5, 6, 7 properties, because they can have one limited liability company and then put each one of their single-family homes or duplexes, whatever they have, into these compartmentalized cells, and know that each one of those is protected if something were to happen to one of those.
So if somebody has an accident on one of the properties, it's not going to affect the revenue or the assets of the rest of the thing.
Yeah, and that's a great point. That's something that everybody's, I think it's kind of like a misconception here. Everybody thinks that liability stems from the asset. So they think, okay, I have my tenant who's living at the property. Maybe there's stairs. They're walking up the stairs. They step through the stairs or something like that. I had them done. That's where the liability comes from, right? So, but what's funny is that where the liability typically comes from is ourselves. So liability runs both ways. It can run from the asset to us, or from us to the asset. So if you own a property in your own name, you're at H-E-B and you're backing up, you didn't see, grandma pushing the shopping cart behind you, you bump into her, you get sued and you're held personally liable. Well, that liability, just because it didn't stem from the asset, doesn't mean that judgment can't extend to the asset at that point if it's owned in your personal name. So the point that I'm trying to get at here is that most people think that the liability arises from the owning the home itself, but really it comes from us.
Okay, so in a situation, let's do a real a pretend example, right? Sure. Totally hypothetical, right? So if somebody is Airbnb type situation, right, and they're going up the steps to their second floor room, and they slip and fall because maybe there's something wrong with the step or whatever.
Sure.
And then they become injured. So that property is, and that owner of that property is at risk there, I would think. And then to what we were talking about earlier, it wouldn't extend to any other properties if they have them compartmentalized like that. So I'm correct in that?
Correct to the extent that that the series is maintained properly, so that each of these different cells that I'm talking about has to be treated as if it's its own company. If you're commingling assets, if you're just commingling the business in general, then you might be able to what they call pierce the corporate veil and get through one to another cell. But assuming that all the formalities are being followed, then yes, it would. What you said is true.
Okay.
So is there like a price tag? Like for some reason, I'm thinking about an LLC is tied to like $5 million worth of assets. Is that anything? I don't know where that came from. Something I heard years ago.
So I have investors that have one single family unit that they put in into the LLC, and I have some that I usually set up our Series A, Series B, Series C, and I have some that are almost all the way through the alphabet. So,
Cool.
but
that'd be nice.
To answer your question, I mean it's really about you and your personal setup. If you don't own anything in your personal capacity, then maybe your situation's a little bit different. But I think of the LLC as like a one-time insurance policy. I mean, you put it in there once, and it's separated from you.
Is there a monetary limit to what the protection is? I think that.
Yeah, I think like
Oh,
up to
that's-
$5 million, or is there a monetary amount that you have to like? If it's this, I don't even know, because if it's one asset, it would be in one
Sounds
LLC.
more like you're talking about an insurance policy versus
Yeah, I guess I am. I don't know. I heard it on Dave.
Yeah, I
Ramsey
think
years
that
makes
ago.
sense.
I think no, I get what you're saying now.
Like
Sorry.
you can put up to $5 million in one LLC and have it be protected, and then you need to do another LLC to get that same level.
I mean, that just sounds right anyway. I would do something like that. I don't know if there necessarily is a judgment limit, I guess is what I'm trying to get. Like, is there a limit on how much a judgment can attach to, one specific LLC? I don't know I don't think that there is one. But that's a good point though, and that's why the series is great too. The series LLC is great is because maybe you don't have to hold $5 million worth of assets in one compartment.
Now, here's a question, because I've been looking more into the multifamily real estate investing world, and what I've learned is it's a lot of it's a team sport. When you're buying assets that are 1 million plus, very few people have the money to either put up the down payment or qualify it on their own. It's usually a few people all going in. So how does that work when you have multiple owners of a single asset?
Yeah, so I mean, these deals can be structured so many different ways. It's crazy. But a lot of the times we have a limited partner who forms a company, and then like say that you were buying in, you would form your LLC, and your LLC would purchase ownership in this other company over here, and that company over here owns the building, and then you have the right to a distribution for the profits and losses of that asset.
And
That to me is fascinating. I definitely want to get to that point where I'm doing.
You can
some
start
of that.
scaling really quick.
Yeah.
When you're using other people to help, yeah.
because there's the joint ventures and the syndication, and there's that fine line between the two of them.
Yes.
Where you're so do you work with people in that kind of situation?
We do.
a lot?
So we have some investor groups that do something very similar like that. Why? Because it becomes more attainable. Larger assets become more attainable. And what's always very key in those, because we've seen on both sides of it where they work out great and some just don't work out so right, is of course having someone like Keaton actually just kind of making sure that all the documents, everything's, all the expectations are set up front. Because the rest of it, acquiring the real estate and managing it, so on and forth, that's the easy part really. Let's get the structure set up correctly, and everything from there kind of starts falling in place.
Do you see people who don't put that structure in place? And what's like the worst case you've seen happen?
Let me see. Worst case that I recall, possibly, I don't know if it was worst case, but it didn't work out well, was about 3 or 4 years ago. We had a prospect approach us in reference that they were closing on I think it was like a 42-unit apartment community. And they were coming in from the West Coast. We meet with one of them. We meet with him, and traditional same questions. Let's look at the asset. Let's walk it. Let's give the perspective. Let's give a visual. Later on, we find out that he has 2 partners. Okay, not a big deal. Let's make the introductions. Let's have our conversations. How is this structured? Oh, well, we haven't had anything structured yet, but we're talking to our attorneys. Great. Later on, if you guys take the time, make an introduction, so we're all on the same page. Everybody wants to make sure that we're all speaking the same language. The project continued. This project, it was a complete what we call restabilization, meaning that we evict everybody that's currently there. We're renovating the full unit, and then we're going to have to kind of rebrand it. And we're midway through the process, already renovated maybe half of the community, when we're notified that there's a lawsuit with one of the partners. And so in those situations, on the management side, our responsibilities are just to be as transparent as possible with what everything's happened, what work has been done, who the communication with has happened. And we provided all of that, but what ended up happening was that I guess they never tied anything up at the very beginning, the structure. And one of the individuals, a lot to Keaton's point earlier, had something happen in his personal life that now they were coming after these assets, and because the rest of the partners weren't protected, it became very ugly very quickly. And at the end of the day, they had to liquidate that project halfway. Yeah,
That is crazy.
yeah, and it's all because I mean, we don't know all the details, but from what we gathered outside, it could have definitely been taken care of if they did everything up front correctly. And sometimes we get caught up, we get too excited about, oh, this is what's exciting over here. This is the sexy part. Well, we could take care of the paperwork later. But the reality is that paperwork is the foundation, and it's the structure. And that's what everything's going to be held up to.
Yeah, it sounds like they were just operating as a general partnership, which has no limited liability protection at all. I mean, a general partnership is just 2 people, individuals going together for the purpose to make profit. And so, but they're not going to be severed from anything. So that having an entity in general sounds like it would have helped them a lot. And then also, if you got 3 people going in on a deal, you got to have an operating agreement. Those expectations between all of those members have to be set up front. Because stuff's going to come up. Everything, like you said, everything's all great and awesome in the beginning. Everything looks exciting. But then you start to get into it, somebody's not fulfilling their obligations or something like that. And you need something that's going to govern how all the parties should
Absolutely. Yeah, money has a funny way of finding those cracks and then in between
like
relationships.
Water.
Yes.
Well, and I operated in the residential real estate space, but I'm assuming that in purchases of that size and scope, there's not a lot of promulgated forms to be using. I'm guessing that those contracts have to be written up by an actual lawyer, yes?
I would prefer, they do have promulgated forms. They do have promulgated forms for it, but I would prefer to refer to someone like Keaton because it's more customized to the actual situation, whether it be different parties, specific assets, the proper expectations.
And you don't know what you don't know until you end up getting sued or something happens, and you're like, now you just lose everything because you didn't spend a little bit of time and extra money to make sure it's done right.
on the upfront. Yeah, and every transaction's so different,
Well, even in those, like the 10-page residential, single-family 1 to 4, whatever, multi-unit tract contracts, I still would see agents who were not properly trained on it, or they didn't know the nuances, because there's nuances to contract law that, I can't even speak to it as a licensed agent because I'm not a lawyer, but you got to understand the implications. And there would be agents that didn't, or they didn't know how to read it, and they didn't give their clients the advice, and their clients would skip over some really meaty stuff. And that's it's still high stakes in 1 to 4 family, but it's not near as high if you're buying a $4 million multi-unit. I can't even imagine trying to write that contract. I would definitely not do it.
No, but to both of y'all's points is we only know what we know. You align yourself, you partner yourself with the right team you mentioned earlier, which is always key. We're talking about systems, processes, alignments, and that's kind of like where we're all talking about right here, right? We all get that, understand that, and that's one of the first conversations that we have with prospects is that. So do you have your team together? So, well, what's your team consist of? Well, let's make sure that first and foremost you have the proper representation on the agent side. Let's make sure that your lender understands what kind of asset you're looking for, because it's a different lender from residential to commercial, or even if it is multifamily or a quadplex. So there are those nuances that you want to know. Make sure the inspector is the correct one for this. Make sure that we have the right legal team that we can turn to when we have those specific questions. Your property management team. So it's all a team effort.
And back to actually managing it, I know there are some nuances with property management law that some tenants can use to kind of skirt that line. How nuanced is that information? If you don't know it, you can get really screwed.
It can. And Keaton can probably speak to this better than I can because of our situations. We've had a few where they'll use the letter of the law to be able to buy themselves another 30 days, 60 days. We've learned throughout the years that contracts are everything. Documenting text messages, emails, conversations goes a long way. So if you're doing everything by the book, yes, you do have to spend time going to court and appearing in front of a judge, but 9 out of 10 times, it works out. But the individuals that are doing it themselves, everything's fine until, you mentioned earlier, there's a lawsuit. And that's where things kind of get squirrely because, well, as a do-it-yourselfer, you didn't know that, hey, there's a property code 92, that you have to have smoke detectors, you have to have certain locks, keyless locks in the front, back door kind of thing. And those things, the new tenants, or there's legal representations out there that hone in on that and will advise these tenants to say, hey, we can grab onto this and we can buy you some extended time or something along those lines. And that's where it gets costly time and money-wise. And, of course, individuals like Keaton, he would advise landlords, because there's some landlords that maybe will do it themselves, but they know enough to say, I need to hire an attorney like Keaton so I don't find myself in that situation. So there's that angle as well.
Yeah. Well, I think you said it really well at the beginning. You learned these lessons by having to go through them. You learned them the hard way. It cost money. It cost time. And that's the huge value add you guys offer as property managers is you maybe don't learn it the hard way. Hire me.
Absolutely. Absolutely. That's what we want. We don't want to repeat other people's mistakes if we already know what those are. Let's help. There's a whole set of other challenges that's going to come around.
Well, let's make new mistakes.
Exactly. Let's make new mistakes. I like the way that sounds. Let's make
So
new mistakes.
what about the selection process?
I was going to ask that same thing. You talking about tenants?
Go ahead. No, ask your question.
I was going to ask you, how do you find these tenants on behalf of your clients?
Absolutely. So great question. First and foremost, I mean, of course, you have to expose the properties as much as possible. Nowadays, everything's online. So about 75 to 85% of new applicants come in from online. So everything from Zillow to Google Homes to Yahoo Pads. There's about 65 different websites that you put the property on. At that point, you get applicants that come in, and so you're doing. We learned a long time ago that it's better to take an additional day or two to really kind of screen this as opposed to hurry up and rush it, because it's going to cost you so much more time in the middle of a tenancy to get a tenant out. So, of course, what are we looking for? We have certain criteria. Everybody's a little bit different, but our base criteria is at minimum 3 times the rent, 600 credit score and above, no evictions, no bankruptcies in the past 3 years. Those are the basics. Now, we also know that life that's happened, say, for example, COVID 3 years ago. So a lot of people, their credit got dinged. So we tried not to necessarily just take those data points. We kind of try and take more of a personal aspect of it, and it says, okay, look, we see that you've got a great rental history. We see that you make enough money to rent this property, but your credit score got dinged a bit, and we can see why, right? Because you have the background checks. So at that point, we're able to adjust a little bit more in the sense of, to make it fair, what this works. Well, okay, well, maybe it's an additional security deposit, right? So, because at the end of the day, what are we trying to do? We're trying to protect the asset. Now,
Right.
Nobody's got a crystal ball. Even good tenants go bad. But we minimize the obstacles from past experience on what we have seen, and these are the formulas that work. So that's kind of our process on how we go in the background to kind of select the qualified resident. And that's what we tell our clients is we're here to find a qualified resident because at the end of the day, a big part of owning real estate is how long can it stay without turning over, right? So we want to find somebody that's going to not only stay there a good amount of time, but take care of the property as well.
What about selecting the property itself? If you have an investor come in and they're like, hey, I don't know what I'm doing here, and how do I find the property, a good property? And I know there's a lot of money in finding that property. So do you guys help with the finding the property part? Absolutely.
So first, it runs the gamut. First, okay, what price point are we looking at, right? It's like when you're buying a residential home. It says, this is how much I can afford. Well, let's work at those numbers. It says, how did you get to those numbers? It says, well, I'm working with my lender. Great. Let's pull in the lender together and make sure that we're maximizing what you're comfortable at. Once we identify that, then we start looking at assets at that price point. Our part of our evaluation on assets, when we've gone through all that, is a big part of it's what we call value add. There's a lot of properties that we find out there, and let's say it fits the scope initially. We go into the property and we see that it's a cliche, but we like properties that need a lot of work, ugly properties, because those are the ones that usually find a little bit more margin. Most people are kind of scared of it because, well, that's too much work. I don't know the contractors, who's going to oversee the projects. Well, once again, that's where your property management team comes into play, is because that's what they're there for. They're there to they're supposed to already have all the contacts with the contractors, vetted contractors, identify proper market value upgrades, meaning let's not go into a property and just put granite countertops on there because it looks great. Maybe that specific asset doesn't require granite countertops. We can get the same ROI if we put some updated Formica countertops or some replastered countertops, something that's a lot less expensive, but we're still getting the same rent. So let's make sure that we identify the correct upgrades. So we'll walk through them with that process. We get our contractors, so the property is under contract. It's being inspected by a licensed real estate inspector. We make sure our contractor goes in there to give our client the numbers. How much is it going to cost to do these market relevant value adds? And then what is going to be the rent to do that? It says, okay, so if we do these value adds, the rents are going to come to this. So we have how much we're going to need to spend during an option period, so that way our client can make the most informed decision during that time. There's less surprises later on. Because sometimes we'll receive a call from a prospective client that says, hey, we're closing on a property today. We need a property manager tomorrow. Fantastic, great. We'll go through everything, and sometimes what happens is, says, well, but my agent told me I could rent it for example, $1,000. Says, unfortunately, they only rent for $800. Not that the agent was being malicious by no means. That's not their wheelhouse, right? They're not there to kind of really assess the nuances.
You guys
overly
do that.
We'll do that.
Optimistic.
So that way a client has all the information. They know what the current rents could be during this time, the way as is. What are the relevant market value adds that we can do? How much is that going to cost? And what's going to be the new rent amount? So when the time comes to close, not only does your PM team have the vendors lined up if there's work to be done, they're already rocking and rolling day one after it's closed. But we also know what rents we're going to hit and who's going to be accountable, right? Your property manager is the one's going to be accountable for hitting those rents, not the agent that helped buy it.
And I think that's a huge, huge point to make, because something, as I look deeper into it, you go on all these online ones that are for sale, which, that's not usually where you find them, but you look at the prospective rents and they are wildly optimistic. If you didn't live in San Antonio, if you didn't live and work and know the area well, if you're buying from out of California, Mexico, wherever, be like, yeah, because you don't know that $1,200 a month is a wildly optimistic rent amount in a certain area of San Antonio, when really, based on us here, we'd probably know that it would only rent out for $900. But if you start looking at these online properties, wildly optimistic is what I would call.
That's a good point.
You have a question?
Yeah, I did. And kind of to your point, I was wondering, where do most of your clients come from?
We've been fortunate to grow by word of mouth.
Okay.
We really don't do much marketing. Going back to we were talking about our model that we kind of keep it under a certain number. It has worked well for us.
Okay.
So most of ours is just word of mouth, really.
And are they local or are they?
So about 65 to 70% of our clients are out of state, out of country.
So you're boots on the ground.
We're
here
boots.
too,
That's
which
a
is
great way of
huge.
putting it. We're boots on the ground. Throughout, of course, this being Military City, USA, when we first started, many of our clients were military. And it was during the time, it was about 2010, 2011, where that crash was happening. We saw that a lot of individuals weren't able to sell their homes, and they were going to be stationed somewhere else. So that's kind of how we started, and a lot of our systems became because of that was these individuals are definitely out of contact most of the times. So we built a lot of our systems for individuals that just needed, once again, that turnkey, full service product. And it's grown throughout the years. And now, yes, it wasn't intentional, but because of the way we were constructed, I think individuals that are out of state, out of country, feel comfortable with us because we are able to take care of everything from A to Z. And we have that communication where they know, I mean, where videos or photos, they see the progress. If we're doing something minor, as HVAC system change out or full renovations, you're seeing it all documented and you can see what's happening.
Cool. We're about out of time. Did you have a last question you want to fit in?
No,
We
I
got
think
one? You good?
that covers what I wanted to know.
Awesome. Well, thanks, Jaime. We got a whole lot of information there. And when it comes to real estate investing, it is a whole world.
Oh,
right?
yeah.
And you've got to know what you're doing. And a mistake that you make in the very beginning or anywhere during the process can cost you big time. So getting professionals to help with that, I think, is a huge deal. All right, to wrap up the show, quick. Oh, so Jaime, if people want to get in touch with you, how do they do that?
You can reach me at area code 210-672-4000, or our website is spm-roi.com.
Cool. And Keaton?
Yeah, if people want to get in touch with us, they can reach us at txsuits.com or 210-503-2800.
I feel like y'all should really capitalize on the fact that Suits is on Netflix now and everybody's watching it. And like you could like really lean into that. And you're like, what are Texas Suits?
Hey.
And reach out to Keaton.
Yeah.
Reach out to Keaton.
I love it.
I love it. There's something there. All right. As we wrap up the show, quick reminder, check out our latest podcast or catch video version of the show anytime by visiting our website at satalkradio.com. That's going to be it for us. You guys have a great week. We will see you on the next one.
Hey, thanks
Thank you
too.
so much.
Thanks for having us.